Welcome back to my channel. FX Bryce here, the trade guru. So look, on this video I want to show you guys the step-by-step analysis on how I was able to call some of the trades I called in my trading community and made a lot of money, made a lot of profit from this trade. But I want to show you guys how to analyze the market step by step, how I did that, and how you too can be able to implement some of the things I will be telling you on this video to make ridiculous profit. Now I'm just going to let the intro and disclaimer roll, and I will see you guys just after the break. So let's take a look at this example. Now listen guys, whether you're a beginner or a professional trader, this particular thing I'm about to show you is going to change your trading forever. So pay attention. Now I want us to analyze this particular chart together and try to understand now. This is not a current position of the market, but I'm trying to backtest it just to show you guys something, how to analyze the market, how your mental procession should be while analyzing the market. Now take a look at this particular chart, for instance. Now let's assume you open the chart and this is what you see. Like obviously you can see from this particular point that the price was already forming some type of uptrend, right? So there is a potential for you to try to buy the market. Now I want us to understand something. How do you analyze and how do you place your buys or sells or whatever it is you want to do in the market? Now it's not just about selling in support zones or buying at selling in resistance zone and buying at support zones. You are looking for confluences. Now I'm going to show you something. Now assume this is where the market is, for instance. You can obviously see that the market was sort of in a trend here, and it started ranging on this point. What you're going to try to do is that you're going to try to see what pattern the market is forming. Sometimes the market is forming a triangle, sometimes it's forming a channel, sometimes it's forming several different kinds of patterns. So it's good for if you check my video, I talked about how beginners need to learn patterns, because patterns will help you understand what the market is doing, so you will know what to trade. Now listen, if you can look very well, you will see that the market is sort of inclining at an angle downwards. So what you're going to do is that we're going to sort of use a trend line to connect these lines. Now it can form anything, but I'm trying to make you to be observant at what the market is doing by the time you open the chart. Now listen, what are you going to do? Now let's assume this is where the market was, for instance. Yeah, if the market gets to this point, does it mean you're going to buy? No, it doesn't mean you're going to buy. Now listen, this is the bottom of this trend line, right? So if the market dropping on this bottom, it doesn't mean you're going to buy. You can only buy on this point if you can find a confluence zone by which this market has been that can interact with this line. If you can find another zone towards the left by which this particular place can interact, then you can be able to buy there. But what I can see that if I bring out this, if I look at this particular point where price was having some good resistance and I drag it forward, you will see that this zone, you will see that this particular place and this particular zone here does not really interact, right? So this particular place, even though it's a support zone, I cannot come here to buy. I'm not going to buy the market here, right? But if peradventure I can find another point where this one and this one will interact, then I will buy. So what I'm trying to tell you is this: we do not buy because price has gotten to a support zone or a resistance zone or whatever zone. You buy because you can see, you buy or sell because you can see that the place is a confluence area between two or more lines. Now this will change your trading. Listen, I'm telling you the honest truth. Now listen guys, so let me keep this zone. So you can see how this point was not necessarily, even though the market eventually bought, it doesn't mean we would have bought here, right? So this buying is not our trade. So what I'm going to show you is that we're going to keep scrolling. Now this is not the current move of the market, guys. I'm just trying to backtest something to you guys. So now take a look at this point where the market has now dropped down all the way. You can see how it interacted with this line and also this zone area traveling to this point. All of them met at this point. Because the two of them has met at this point has become a high confluence zone where price will be taking orders. So at this point, you can now begin to buy. What did I say? I said buying, you only buy when price has confluence. Two lines have interacted at a point and price get there. That is the time you begin to look for buy. So the moment price begins to make some buy pressured move, you've already entered your buy on this particular confluence area, right? So if you bought, how I like to take my take profit is two ways. I like to take my profit at Fibonacci. I draw my Fibonacci from the top to the bottom because I'm buying, and I take profit at 78.6 Fibonacci. So somewhere around here will be where I would take profit. Also, I would also like to understand the I also like to understand the trend which the market is also making on the top side to guide my Fibonacci. Now you can see this is where I would have, if I take a buy somewhere around this point, I'll be buying all the way to this top here, 0.786. So you can see how the market was able to give us our take profit on that zone. Now listen guys, I'm still analyzing. I want you guys to learn something today. It's not necessarily about your finding support zone. This is the take home I'm giving you. It's about confluence areas. Now look at, I want us to keep analyzing and keep seeing what the market is doing. Now you can see we will not be able to get these points because even though the market bought, what we are looking for is confluence zones. So I'm going to delete this Fibonacci here, so just so that we can see the price very well. All right guys, so let's keep going into the future to see where price would have given us another confluence. So I'm still going to stretch this line all the way. I'm just going to make sure the line is straight up. All right. So that's what you'll be doing. You would be stretching the lines to see what. So now you can see how price has been able to get all the way to this our bottom line and touched it. Now the moment I see price touching this my line, I'm buying up. What I want to do is that I'm not going to rush down to this point and start taking buys. No, I'm going to look to my left to see whether there is another line that can come into this point and confluence with this line. If I cannot find another second line, I'm not going to take the trade. That's how I want you guys to reason when you analyze your market. You have to be able to understand the price pattern so you can look for confluence zones. So now when I look to the left of my chart, I can obviously see that this particular place has been a good support for price. So what I'm going to do is I'm just going to pull up the zone tool. I'm going to pull up the zone tool and draw the line. So what you can see is that when price was able to come down all the way to this point, there is a confluence between this line here. Now understand something. The reason why I'm drawing the second line is because price has been able to get to a first line and started the buy. I have to see that price got somewhere and started buying from that point before I'm able to look for other places where that a line is coming there to confluence with price. If I can find another line confluencing with price, then I'm in a good spot to take my entry. Now, the moment I see price taking buys from this point and I see that this point is a confluence zone, immediately I've seen that buy pressure. What I'm going to do is take my buy. How do I exit the market? I'm going to pull out the Fibonacci and I'm going to exit at the 0.786. Now guys, this is a strategy I'm teaching you guys, and you can take it to the bank and cash it out anytime. So you can see how the market would have been able to give us our 0.786 Fibonacci, and we'll be able to take profits on that trade. Now let's keep going forward to see whether we can find another place where price would confluence. Now look at this, for instance. You can see how the market was able to get here and starts buying up. Immediately I see the buy pressure. What I'm going to do is I'm going to look all over to this point to see whether somebody is causing this buy pressure. Now, from just hindsight, because already I'm experienced in this type of trading, I can obviously see that price in this spot was a good support for price. But I'm not going to take this buy because of just this one signal that is here. So what I'm going to do now is I'm going to see if another line is causing price to make that move. So I'm going to draw this line, and you can see that this particular point was a confluence zone between this one and this one. So the two of them came and met at this point. So this point becomes a high interest zone. So at this point you take a buy, and when you take a buy after this bullish candle, you already take a buy, because now you can be able to confirm that the point where the buy is happening from is a good confluence zone. What do? You take out your Fibonacci retracement and you draw the Fibonacci retracement, and you can exit at 0.786. Another way to exit the market is probably if you're going to use trend line to understand that this point was also forming like a trend, and you'll be able to get good profit at this trend line. So while some is coming here at this, some is coming out here at this 0.786 Fibonacci, you can be able to draw a good trend line here and be able to come out also on this particular trade. So I want you guys to understand something very important. Taking buys or sells in the market is not just about understanding or getting a good support zone, resistance zone, or whatever it is you're looking for, then finding whether you're entering. No, if you cannot find confluences, at least two or more price action. Now listen, I'm not talking about indicators. I don't care about your indicators, whether your indicators is saying it or not. I'm talking about price action. If you cannot find two or more price action signals signaling to you about a particular point to buy or sell, forget about that trade. Look for trade. Listen, trades will always come. There will be trade tomorrow, there will be trade next tomorrow, and even if you don't take the trade today, there will be one more tomorrow. So the psychology of it is very important. You have to understand that you must not take the trade today. If it's not your trade, it's not. Do you understand? Everything must align, right? So until the stars align, you take no trades. So guys, I hope this strategy, this understanding was helpful to you. Also, don't forget to like and subscribe, and also my WhatsApp number is on the description of this channel. If you want mentorship or whatever it is you want relating to trading, also be able to DM me. I also do account management if you're interested in that type of thing. All right guys, so I'll see you guys in my next video.